I want to start with you on the big challenge of the year, and that's cyclone relief. You got to rebuild the parts of the North Island that were just shattered by the cyclone in February. You've said it's going to be a multi-billion-dollar price tag. As you get ready for the big budget release in May, do you have a more precise figure?
We're getting more information every single day. I mean, this is the biggest natural disaster in New Zealand this century. The costs are sitting somewhere just under where the Canterbury earthquakes were, which were a very big impact for us. But it will be multi-billion dollars, but it's a long-term program. We're talking here about costs about rebuilding road and rail networks, our electricity networks. So they're not costs that will all fall in 1 year. They will actually spread themselves over a number of years, but we're certainly talking a multi-billion-dollar bill.
When you say multi, though, multi could be 3 billion, it could be 20 billion. I mean, seriously, do you have any sense of where in that range you fall, or even more?
The latest information we've had is somewhere in around the 9 to 10 billion area, but that's still coming together. But a large part of that is infrastructure rebuild, which we can spread the cost of over a number of years.
So, how are you going to cover the cost?
Yeah, and look, that will be announced when we do the budget in May. But New Zealand's balance sheet is pretty robust. I mean, our net debt currently sits under 20% of GDP. So we certainly have the room on that balance sheet to be able to manage the costs that are in front of us.
So when you look at the bill and you say, oops, we're going to need some more, do you figure you maybe just increase your borrowing for a while?
Well, as I say, with net debt down under 20%, we've certainly got that headroom on the balance sheet. But we're also looking very closely at how we reprioritise and save money within our current budget, making sure that we do have the sources of revenue we need. And we'll put all that together when we bring our budget out on the 18th of May.
But you're not ruling out an increase in borrowing?
No, I'm certainly not. And as I say, with the balance sheet that we've got and the kind of bill we're looking at, I think this is a manageable situation for New Zealand.
Okay, now the RBNZ, the Reserve Bank of New Zealand, has weighed in. They say if you rebuild with borrowing, that's going to be potentially inflationary. That could ultimately then lead to more pressure for more interest rate increases. How do you handle that?
Yeah, I think that's where it's important to recognise the kind of rebuild that we're talking about here. So this is long term. We're not actually physically going to be able to fix all of the roads or all of the rail network that's been affected within, say, one year. So when you actually spread that cost over 1 to 3 years, I think that the inflationary impact is significantly less than people might be fearing. So we understand the point that the Reserve Bank is making. We obviously don't want to unnecessarily increase our borrowing, but we think that this is manageable.
Do you think it would be useful then, potentially, as you think of all your options, to maybe do something like a tax, a temporary levy, something along those lines, to spread it over a bit?
And I think the issue there is obviously, as you're saying, we have to look at all of the options that are in front of us. The issue there is in the middle of what is, for many New Zealanders, a cost of living crisis, significant pressures. Do we want to put onto New Zealanders at this time an additional impost in the form of a levy? So we have to work our way through that to see whether that's the right thing to do. But given, the room we have in our balance sheet, the ability we have to make savings, to reprioritise, we have to work through all of those options before we would consider actually levying New Zealanders more.
I'm curious, I think you just alluded to, as we started talking about this, redirecting spending from other projects. When you look at, if that's, I can imagine you might have different approaches, maybe a little tax, maybe a little borrowing, maybe some redirecting. What kind of spending? Are there any things right off the top of your head that say, we could easily do that?
Well, there's certainly, we've found a number of savings already in our budget. The incoming Prime Minister, when he came in January, asked all ministers to look at their budgets and say, what can we take out of here? So there's been some programs that we've stopped. I had a social insurance program that we've stopped our work on now. There are other projects that we have done that. We've got money that we allocated during the COVID emergency that maybe isn't needed as much now as it was then. So we've been bringing all of those savings together, and we think certainly there are ways that we can meet some of the costs that we're now facing from those savings.
Your economy contracted a bit in the fourth quarter, about 0.6%. How does it look to you but you were watching many parts of the economy all the time as the Minister of Finance, of course. Could it have contracted again? Could you possibly be at least technically in some kind of recession already?
And look, that has been the forecast of a number of economists. Clearly, not only does the cyclone have an inflationary impact for us, but it also does in the immediate term slow down some economic activity, and that will be dealt with in the March quarter, the numbers of which we will see shortly. So look, it's possible, but I still believe in the resilience of the New Zealand economy. We continue to make goods that the rest of the world wants to buy. We're investing heavily in our skills. Our free trade agreements are starting to take hold in a number of places. And so while I think we're in for a difficult period, if we go into a shallow recession, I think New Zealand will come out of it relatively quickly because of that resilience in our economy.
Well, the RBNZ, never reluctant to surprise people, did a bigger than expected rate hike in early April, 50 basis points instead of 25. As you see the economy maybe already in some kind of mild recession, you've got resilience. Nevertheless, could more rate hikes be something that could tilt it toward a deeper recession?
Yeah, I make it my practice not to comment too much on the decisions of the Reserve Bank, because that can have unfortunate consequences. What I did read, though, through the Reserve Bank statement when they made that decision was what they were interested in doing was maintaining current interest rates. Their concern wasn't necessarily that they wanted to see rates go up per se. And I think, they've got a job to do, and that's to bring inflation back down to between 1% and 3% over the medium term. I also have a job to do, which is to get fiscal consolidation, but also support people through a difficult period of time. There is a balance within that we can strike together, but the Reserve Bank have their job to do, and the official cash rate is their tool that they use to do it. But I take heart in the fact that they spoke about maintaining current rates. They weren't looking to see much in the way of increases there.
Well, and I will note, for the record, that yes, it seems to me you have been supportive of the moves, as much as you say, as all finance ministers or treasury secretaries do, that you don't want to say too much. But could there be a point where you think they're doing a bit too much to stop inflation versus keeping the economy on some kind of track?
Yeah, look, these are the decisions they have to make, and we all have to make trade-offs, and we all have to juggle competing priorities. I think, one of the things I have heard from Reserve Bank in the past is there is a time lag with the impact of what they do, and I'm sure they'll be thinking about that when they're making their policies. The full impact of an interest rate increase may not be felt for some time. So they'll be looking at that. They'll be looking at the state of the New Zealand economy and the resilience and trying to make their balanced decision from there. In the end, I have enough to worry about on fiscal policy, to be frank, and putting our budget together. So I'll stick to that for the most part.
Housing market. Just about every country, I shouldn't say that, so many countries around the world last year or so, housing market has been a very difficult, contentious issue. And we know in New Zealand we're starting to see more signs of stress emerging, more people falling behind in their mortgage payments. So are you, number one, concerned about that on the economy? And then the impact of these further rate increases on a market that's already showing signs of some stress.
Yeah, and look, obviously we saw a massive increase in house prices in our market. Where we are now, I think we've nearly got a drop-off of around 20% from its peak. That doesn't even take us back to where we were before COVID. So while for individual households there is definitely stress, if we look at the market overall, we're actually just getting ourselves back to where we were maybe 2020 rather than anything before that. So I think we've had extraordinary amount of house building in New Zealand, record number of building consents. So we're starting to see supply and demand come back to a form of equilibrium, particularly in our largest cities. So I'm confident the market will survive, but at an individual household level, there is stress. And obviously for those families, they have to look at how they manage their outgoings, what they can do to within their own households, retrench a little bit in their spending. That's a real challenge for them. Our focus is on supporting low and middle income households to make sure they can get through this difficult period. But I think the housing market in terms of supply and demand is starting to come to some kind of balance.
A couple more quick questions. Do you think, one last question on the RBNZ, I promise. Do you think they're near the end of their tightening cycle, and if maybe they should be by now?
Oh, look, I think if you look at their own comments, they would argue that they are near the end of their tightening cycle. They've actually made that comment. They do have that job to do of getting inflation to between 1% and 3%, and so they'll make their judgments on that, but their own commentary would tell you that.
Okay, finally, I promise. biggest risk for the New Zealand economy and how it underpins all the plans you have this year, including those costs of starting to rebuild after the cyclone?
When I come to a place like World Bank and IMF meetings, it's always the international environment. New Zealand is a small, open trading economy. We rely on a stability within the global markets, and clearly there's a lot of different conversations going around here, both about big picture issues like climate change, but also geopolitical issues. And so for me, that always remains the biggest risk to New Zealand. It's important for me that we diversify our economy, that we make sure we're selling more goods to different places, that we develop our services sector. We do all of those things, but ultimately this international environment will dictate a lot about what happens for New Zealand. So that's my number one risk.